Hello, listeners. Welcome back to Cognitive Dissidents. As usual, I'm your host. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Joining me for our weekly chat on geopolitics and markets is our Chief Investment Officer, Rob Larity. A quick programming note, Rob and I will be taking next week off from our weekly chats due to the Thanksgiving holiday in the United States. I will probably have an episode to slide in as a replacement, but you won't be hearing from me and Rob for 2 weeks from when this episode drops, so just note that. Last but not least, we're up to about 70 reviews on iTunes right now for the podcast. Is iTunes still a thing? Wherever Apple is putting these podcasts. We need 30 more to get to my goal of 100 by the end of the year. So if you have not rated or reviewed the podcast and you're willing to take a few seconds out of your day to do us a solid, that would be amazing. Otherwise, you can find out more information about Cognitive Investments by going to cognitive.investments or emailing me at jacob@cognitive.investments if you want to talk more about what we do, or you have comments on the podcast or anything else that is on your mind. Without further ado, let's get to it. Cheers. See you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. We're back at it again. Rob, I don't know how it is in Paris. It's freezing here in New Orleans, like actually freezing. I don't say that as a Southerner. I say that as somebody who lived in the Northeast for 5 years. Like, it's actually cold here. I hope it's nicer in Paris.
Well, it's raining, but it continues to be very warm, which gets into the whole energy crisis issue. But
yes,
yeah,
you poor Europeans. Are you having to chop down trees in the parks in Paris just to heat your home so that you don't die in the streets?
No, there's not much of a sense of crisis right now. Maybe a crisis of being overwhelmed by tourists, but other than that, it's pretty good.
Yep, that weak euro is a siren song for American consumers looking to spend their dollars abroad. I wanted to start this week, Rob, with the whole Sam Bankman-Fried SBF FTX debacle. I guess I want to start by asking you, and I'm not afraid to admit this, I had never heard of this dude before last week. And I feel good about not having heard of this dude because apparently he wasn't worth hearing about. Was he on your radar? Was Sam Bankman-Fried on your radar as somebody that was important in the world? Because I didn't know who he was.
I knew of him, and I listened to the Tyler Cowen interview with him and didn't find him very impressive. And I asked some friends who are really into crypto what they thought of him, and honestly got like a mixed response. Kind of a meh was the consensus. So on the radar screen, but not some huge figure.
Well, as you mentioned before we got on the podcast, because of your past and the skills in your research bucket, you are uniquely qualified to talk about fraud and deceit and terrible people doing terrible things to well-intentioned humans who are just trying to make a buck. Before I set you up to sort of talk about that a little bit, I just want to read a very short section from the FTX bankruptcy filing. John J. Ray III is now the CEO of FTX. He oversaw Enron, among other things. So just listen to these couple sentences from the bankruptcy. It's the most scintillating, riveting bankruptcy filing I've ever read in my entire life. I have over 40 years of legal and restructuring experience. I've been the chief restructuring officer or chief executive officer in several of the largest corporate failures in history. I've supervised situations involving allegations of criminal activity and malfeasance in Enron, supervised situations involving novel financial structures at Enron and residential capital, and cross-border asset recovery and maximization at Nortel and overseas shipholding. Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here at FTX. From compromised systems integrity and faulty regulatory oversight abroad to the concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals, this situation is unprecedented. dude is coming in hot. Like, that's the fastballs. Like, this guy
It's pretty
oversaw
strong words.
Enron, and he says it's the worst ever. So I don't know. Where do you want to go with it there? Because I'm like transfixed by this story.
Where do I want to go there? Well, everyone this week is going to focus on sort of the scandalous story itself, which we can talk about that if you want. But I don't think we're going to be adding much different on shitting all over this guy and these people. I think maybe what we can add that's a little bit different is just some perspective, right? And just to set the table here as background. So I'm the director of research at Off Wall Street. And for 30 years, we've been, sort of an under the radar, short selling focused research firm to hedge funds. And we were there and uncovered Enron and Diamond Foods, which is another one, and have seen all of this and sort of studied fraud and how it works in a more systematic way than most. And I guess based on that background, what I would add is that fraud works in fairly predictable ways. And maybe the way to learn from this experience or take something away from this experience that's actually useful rather than just, scapegoating this guy, and, which we should do because it's fun and he totally deserves it. But, trying to be educational here. But the takeaway with fraud is that it often works with similar patterns. So you almost always have this presumption of genius where you cannot question someone. And that's something that you see all the time, right? So just look back over the last 20 years, long-term capital management. Those guys were, supposedly geniuses, Nobel Prize winning math wizards. They almost blew up the world with comically inept, leverage and strategies that today you would look on it and say, what the hell were people thinking? Enron, the movie about Enron is literally called The Smartest Guys in the Room. Mm-hmm. Elizabeth Holmes, who's being sentenced this week, she was considered to be this sort of genius person. And really the issue behind that is that with fraud, there's always some sort of social validation that you cannot question or you should not question. And that's what causes these frauds, which in many cases are just not very sophisticated, to happen. So in the Elizabeth Holmes case, for example, which I really recommend reading, there was a very good book written about it. I'm sorry, Blood is in the title, but I'm forgetting. It came out in the last few years. It's very good. Basically the story of what happened. And if you look in there, it's interesting because the way that she got initially put on the map was that she had a family friend who was a very well-known venture capitalist. And this guy basically vouched for her. And he was the first one to come out and say, she's legit, she's great. And he put his reputational capital behind hers. And when you look at the story, like the fucking machines didn't even work. It was like a Potemkin village of a tech company. And because they had created this sort of aura around her based on this one person lending his credibility, people just didn't do the basic digging that was necessary. And, without going into all these examples, because they're all very similar, Madoff, et cetera, that's a common denominator that you see. And that's the same thing that happened here. Like this quote that you read from this guy, I mean, that's absolutely correct. This was, it's so like comical. It's almost banal, this FTX thing. Like it's like you gave the keys to the Goldman Sachs prop desk to a bunch of teenagers, and they of course they blew it up in like a month. And it was just, there was no regulation. They literally just took the money and gave it to, the trading arm of the firm, the accounts that were supposed to be segregated for customers. And I don't mean to make light of it, but it's like, that's not hard. That's not, Lex Luthor, these amazing machinations where, oh my God, how could we ever figure out what they're doing? Like, I've seen some pretty complex frauds. This is not a complex fraud. They just took the money, and
Well, yeah. Just first of all, it's the book you're looking for is Bad Blood: Secrets and Lies in a Silicon Valley Startup. John Carreyrou, I don't know if I'm pronouncing his name correctly. He's the Wall Street Journal, I think, reporter who found out a lot of the stuff. So if you're interested in that, go check that out. I mean, I think it's doubly infuriating with the Sam Bankman-Fried thing because he played up this aura of what was it, effective altruism or whatever, that he was going to do things for good, and that he was actually a force of, or some like kind of voice of ethics in a world that was completely unethical. And there's a whole ideological aspect to crypto too that I kind of want to get into there that is behind this, because there's the FTX thing, but then there's also crypto itself and how this affects crypto, and maybe why crypto was susceptible to a guy wearing shorts and playing video games in meetings and things like that. But yeah, and he seems to have discarded all that.
Well, I think it's a good point to bring up the effective altruism, the perception that, oh, this guy's a genius. I mean, he in many ways embodied everything about this kind of Gen Z crypto fluent, utilitarianism, just all of these sort of things that a lot of people really like. And that's why he's getting these, really positive stories written about him still in the New York Times and the Washington Post, because for many people, they like that idea. It's sort of, he has this aura about him. And again, it's about these auras that these figures are able to create. Madoff had the same thing. People thought he was a great guy, and they thought he was this brilliant guy, and they didn't question simple things. So I guess, like, getting to crypto and the issue of decentralization and centralization, one of the things that this reinforces is regulation works. It really works. And it works for the reason that it's stupid, monotonous box checking. But the reason why these frauds get perpetuated is because people don't check the box. I mean, it's that simple. It's not a basis of trust. It's not a basis of, we can't question, Bernie Madoff. We can't question Sam Bankman-Fried. That guy's a genius. You need bureaucrats for these cases.
Well, yeah, and Bankman-Fried has taken to Twitter. That was another part of the bankruptcy filing that was pretty amazing. You sort of get to the very end of it, and one of the things that John J. Ray has to say at the end of it, hold on, I have to just pull it up here really fast because my computer is slow. Finally and critically, the debtors have made clear to employees and the public that Mr. Bankman-Fried is not employed by the debtors and does not speak for them. He is currently in the Bahamas and continues to make erratic and misleading public statements. Mr. Bankman-Fried, whose connections and financial holdings in the Bahamas remain unclear to me, recently stated to a reporter on Twitter, "Fuck regulators, they make everything worse," and suggested the next step for him was to win a jurisdictional battle versus Delaware. So just kind of dropping the mic there at the end. I'll also just say that I want to get back to this idea of regulation, governments, and things like that. But another thing that it made me think of, there's that quote, that Tolkien quote in Lord of the Rings. It goes something like, I think a servant of the enemy would look fairer and feel fouler. I mean, Enron, Bernie Madoff, Elizabeth Holmes, they look fairer and were actually fouler. Whereas this dude, in some ways, he threw you off the scent because he looked like a joke. Like, you couldn't imagine that this dude was the guy who was seducing people with this idea of genius. But before we get to the governments and crypto and regulatory thing, there's one thing I wanted to pause on for a second, which is this idea of genius, which is an idea I've spent some time thinking about in my past too. And it doesn't just, I think it's been applied now in sort of modern financial context, but it's a fairly modern idea. Like, the idea of the genius is something that springs up around the time of the Enlightenment. And it's this idea that there are just these brilliant people who have revolutionary ideas or incredible abilities just beamed into their heads. One of the very first of these sort of geniuses was Mozart, this 5-year-old kid who was doing incredible things, who was actually a terrible person underneath it all because his family, was parading him around at the age of 4 to go play the piano. If you go and read Mozart's letters, even into his early 30s before he died young, he's like sending fart jokes or something to his relatives because he never developed beyond on that. Anyway, we don't have to go down the Mozart rabbit hole. But there is something about this idea of that we've allowed to get inculcated in society that there are these geniuses who have access to knowledge that isn't there. I mean, Elizabeth Holmes was parroting Steve Jobs, who sort of cultivated that idea of he was the genius who had access to insight that isn't there. We've seen political leaders do this over time to great detriment. The development of charisma in this century, in the previous century, of leaders who are somehow in touch with the zeitgeist. They have access to the real insights, or the real things that are going to unlock potential and things like that. There's something about that idea of genius that I find very dangerous and very off-putting. And there are people who are very smart out there, but I just thought I'd throw that in there because I think it's part of the story that there's something about modern society where we need these figures of genius because we're confused about the world and we want someone to have the power to make sense of it.
I think part of it is we're sort of naturally wired to hand over, I don't know if authority is the right word, but to sort of outsource our judgments or our decision making to figures that are perceived to be geniuses or just operating on a level that's above us, and usually that's sort of a younger figure. I know Madoff is sort of an exception, but oftentimes it's sort of, oh, this person is new. They have ideas that I just don't understand because I'm not in touch with the same forces. Elizabeth Holmes is a good example of that. Like, oh, it's a woman. She has this striking face, these big eyes. She's very striking to look at. She's, has this husky voice. She's almost like otherworldly.
Husky.
And
you describe that as husky. I think of husky as mildly. She sounds like she's like a character in a Frankenstein movie or something. All right, well, one man's husky is another man's whatever.
It's pretty husky. It's on the extreme end of husky.
Yeah.
But there's something sort of innately human about seeing these figures and then sort of trusting them in a way that you should not, and that's getting to not checking the box.
What you said though about handing over authority is actually something I've been thinking about a lot, and this gets to the conversation about crypto, because I don't know. I guess it depends what philosophy. I've been thinking a lot about Thomas Hobbes this week in the context of cryptocurrency, and I mean the Hobbesian idea is that the state of nature is that we're not hardwired to give over authority necessarily. The state of nature is nasty and brutish and short, and we all make war on each other and take advantage of each other at every single turn. And the way that we have grown as societies and civilization is to cede some level of our absolute freedom over to governments or, somebody who can make decisions that are for the sort of greater good. So we're not necessarily hardwired to hand over authority, but the reason we have representative democracy, the entire logic behind the social contract, is we give up some aspect of absolute freedom so that somebody can actually enforce the rules that society needs to actually function. And in some ways, I think one of the reasons the Bankman-Fried story is so challenging is because, part of the idea of crypto is that the central banks, it's all politically rigged. Everybody's doing their own thing for the elites and nobody's looking out for the small guy. So we need decentralized finance and we need protocols that just, we program things automatically and the smart contracts move and the things go from point A to point B. And we want everything to be in the individual, this sort of libertarian idea of, perfect autonomy and perfect freedom. And I think the Bankman-Fried thing is an example of, well, in a world of perfect freedom, there are Sam Bankman-Frieds and Elizabeth Holmes and Bernie Madoffs who are lurking around the corner to take advantage of you. Because if you believe in that idea, I guarantee you there will be somebody else who will take advantage of you for believing in that idea. It's very noble, but it all kind of breaks down. The rejoinder to that is, well, Sam Bankman-Fried was running an exchange. Like, crypto has not advanced enough so that you can have decentralized finance. Once you get rid of the exchanges and everybody has their own crypto wallet and we're off exchanges, things are fine. But I think that's another reason this thing has been so jarring for folks in the crypto world, because here was this leader of this almost ideological movement. And it turns out that, actually, to your point, like, regulators are good. The governments may be rigged, but they're rigged also because they do have society's best interests somewhere in their heads as a priority, where that was nowhere in the heads of anybody at FTX, apparently.
Well, I guess it comes down to trust, right? Because my understanding is that crypto, in theory, makes it so that you don't need to just trust someone else in a transaction, that everything is sort of out there and traceable and on the same wavelength, so to speak. And in this case, he was running an exchange, so you had to trust that they were not going to, you know, I mean, just imagine a bank or Goldman Sachs. Like Goldman Sachs has these huge corporate customers. They kind of assume that Goldman isn't just going to take the money when they deposit it with them. Like, and there's sort of a system of trust. And yes, you have to trust Goldman, but you trust them because, first of all, you know that they're long-term greedy, and it wouldn't be in their interest for them to just take your money. They'll slowly take it over time. Um, um, but also because the regulatory apparatus is there, and you know that people um, are checking the boxes, are doing the boring kind of drudge work that no one really wants to do. Like crypto is not there yet to not require that kind of backing with with these sorts of exchanges. So
Well, I guess I just have deeper questions now whether crypto can ever get there, because I mean, at a certain point, somebody is making decisions about, like, if we're doing smart contracts on an Ethereum network or something like that, somebody's making decisions about what gets coded, what gets programmed, what rules can be made, and how things can be done. Like, and we're supposed to have trust in those systems. I don't know. I mean, we shouldn't, like, the point about the regulators, like, yes, like central banks also have their own political motives, and they've been doing things for centuries that have not necessarily been in the interests of like the common person. Now I feel like I'm Clint Eastwood and verging on get off my lawn territory, because like, just because I want to trust the person because it's easier to sort of figure out what the problems with the person are.
Well, I think it's too soon to say. I mean, this is clearly a blow to the whole idea that this thing, the libertarian aspect of this will ultimately work. I've heard separately from a good friend who's very, very deep into crypto and knowledgeable about these things that many of these sort of DeFi structured decision-making mechanisms are not working very well because they're running into the problems of kind of having the town hall method of making decisions about stuff. But whether those are just growing pains or whether that's symptomatic of something fundamentally wrong in that vision, I honestly don't know. So it's probably too early to say.
Yeah, Gary Golden, who's been a frequent guest on this podcast and who kind of turned me on to ADA and Cardano and the things that they're doing, which are one of these cryptocurrency blockchain companies. They're sort of their genius or their guru is Charles Hoskinson. And he, I mean, if you have some free time, like, go watch his videos in response to what happened with FTX. He was actually very kind of raw and open about the betrayal, not just to the people who lost their money, but what it meant to the crypto industry in general, and what a challenge it was, and how it really struck at the core of everything that everybody's been trying to build. I thought he had some effective points about it, and it may also open up space for some of those more sophisticated cryptocurrencies. Like, there's a limit to what you can do with Bitcoin if the real goal here is decentralized finance. I think people have been saying that for a long time, but yeah. Anything else to say on this before we leave it, Rob?
Well, I would like to leave it on a positive note, which is right now everyone's going to be very negative about crypto as a category, very negative about sort of the projects being done there. And what I would say is, historically, this is what happens when you have a new asset class emerge. Like long-term capital management, for example, was a giant disaster, but in many ways because derivatives were very new at that time, and people didn't really understand how they might work under different scenarios. And the regulation caught up. Like, you can't go out and lever your book 100 times to one, on some crazy spread trade, and then the ruble is going to blow you up. Like, we just know you can't do that anymore. And that's never been a problem in the 25 years since. Even when equities really became sort of an asset class that ordinary people could invest in. Like, go back to the 1920s. The whole stock market was just a giant fraud, basically. Everyone was lying about everything. The numbers were no good. Like, it's just about, like Jesse Livermore. People don't really know this. Jesse Livermore, the very famous trader in Reminiscences of a Stock Market Operator, which is the book about his life, like, yeah, he talks about his trading methodology and everything. But there's a whole section of the book about how to manipulate markets. Like, how do you pump and dump, basically? And like, that was a whole chapter of the book. Like, that was what it was like back then. And now we just take it for granted that you regulate that stuff away. So crypto is truly a new asset class, and it's probably the first truly new asset class in many decades. So these sorts of growing pains are not unexpected. And I think what we should expect is that the regulatory apparatus is going to respond, address the issues to the extent that they're known, and that crypto will probably be safer and better from here on out relative to where it was, 3 months ago. So that's a positive spin.
Yeah, I guess the one problem with that, though, not to hijack your silver lining that you're finding in the cloud, is that, I mean, because in some ways, though, I mean, cryptocurrency is anathema to what you're talking about. Like in the 1920s, you have all these companies and robber barons running around and things like that, but they were at least all still part of the system. Like when the system went belly up, like they wanted on some level regulation. It was good for those companies to have regulation because they were part of an economic system and part of the United States. And they felt like, they had some buy-in to the system there. Whereas crypto in its platonic form of decentralized finance doesn't want to be a part of the system, wants to challenge the system, doesn't want regulators in it because it thinks that the coins themselves and the blockchain technology itself can do all this. They want to take the decision making out of the hands of individuals. Like that thing about fuck the regulators, like I think that's actually kind of embedded within the cryptocurrency idea. I don't know how you square that circle. Like one side is going to have to bend a little bit, and I don't see governments bending because this, like the challenge that crypto poses, if it gets widespread adoption, it's a heart directly to the whole point of representative government and the social contract. Like you're going right at the heart of what governments are supposed to be doing.
Well, good luck escaping the system. I mean,
well, yeah.
The platonic version is great, but there's a reason why it's called the platonic version, because it doesn't fucking exist.
Yeah. All right. Well, I could do this one all day, but we should probably leave it there and get back to things that, well, we know plenty about that. I won't put down our own intelligence. Let's move on to China. Can't get away from China right now, and a lot was happening in sort of the last week. So why don't you give a little perspective on what you're seeing with markets, Rob, and I'll give a little geopolitics, and we'll see where we end up.
So on the market side, Chinese equities had a vicious bounce, which we talked about last week, on sort of rumors of COVID reopening, some enhanced programs to try to support the property market, which we can talk about in a moment. And since then, the last few days, they've sort of been, digesting that bounce. But the thing that caught my eye is that Chinese bond markets are really selling off hard. So the 1-year Chinese government bond was trading at 1.8% a week ago, and now it's 2.2%, and it's just going straight up. Shibor, 3-month Shibor, which is the interbank rate between banks lending to each other in Shanghai. We talked about this plummeting a few months ago as the property market rollover was really gaining speed. Now Shibor has absolutely spiked in the last few weeks. So someone is selling a lot of Chinese bonds. Someone is, getting out of these markets. And the speculation in the financial media is that it's a positive thing. I read on Bloomberg was saying, well, we think that investors are getting out of Chinese bonds and they're getting into Chinese stocks because they're playing this big reopening trade and everyone's excited. I don't know if I believe that, and I don't have the answer to what it is, but it's an unusually sharp move for what appears to be kind of a nothing reflex rally in the stock market in China. Like, I don't see any evidence, and I'll hand it over to you on this because you've been looking at the COVID stuff in great detail. But I don't see any evidence of some major shift in what's going on in China fundamentally.
Yeah, so there's a couple ways to skin this cat. The first is on the property bailout. I was always surprised for the last couple of months because anytime China would announce some new measure to try and get the property real estate crisis under control, inevitably the second line to the article would be, and this is not nearly enough to cope with the problem that China faces in terms of its size. And my response to that was always, of course it's not enough. They're trying to not use the bazooka. They're trying to use a scalpel. Like they have everything they need to. They could bail it out tomorrow if they wanted to. Like they could just put out a press release and say the crisis is over. Like they have the reserves to do that. It will create a bigger problem down the road, but they absolutely have the reserves to do it today. So in some sense, the unveiling of more stimulus and easier policies to sort of help the property sector, to me, that's just an admission that what they've been doing so far hasn't worked. And they're not quite at the bazooka yet, but they had to put away the scalpel and maybe take up the machine gun. Like they're going to have to do a little bit more if they want to stabilize the situation there. So that's how I read that. The reopening stuff, I think we talked about this a little last week. I don't know that there's a huge pivot when it comes to reopening from China. Or at least they're not intending to make the pivot. It seems that they've relaxed some of the rules for expats. So they're interested in foreign businesses and investors and things like that having an easier time. But Chinese citizens are still dealing with lockdowns in and of themselves. The thing that I would point out, though, is that China might have this decision made for it. So Vietnam was an example of a country that had very, very harsh COVID-19 controls for a long time, up until last summer. And then I forget which variant it was, but one of the variants was just too contagious for Vietnamese controls, or maybe it was the pressure was building in society and nobody wanted to listen to the Vietnamese Communist Party at some point. Eventually, they got hit with COVID. And they just sort of had to accept, okay, the virus is here, it's endemic, let's get as many vaccines into as many arms as possible, and we're just going to have to deal with this. And Vietnam supply chain shut down for 6 to 8 weeks. I know of companies that were really scrambling for a little bit of time there because basically nobody was working in the factories for 6 to 8 weeks after Vietnam had been this huge success story. I bring that up because China's facing COVID spikes that it's starting to get to the highest it's ever been in China. And you're seeing things in cities like Guangzhou where the government is trying to crack down, but people are revolting against it. They can't get the caseloads under control. The virus is still mutating. It's getting more and more contagious. It's trying to thwart the Chinese at every turn. The Chinese are also just running out of things like tests. Like there are certain labs in different parts of the countries where they're beginning to run out of tests. You can't have a COVID-19 repression strategy if you can't give people tests and figure out what's going on. So there may be something where China is not going to have a choice, where the government wants to have zero COVID as long as possible, but they're facing what the rest of the world has already faced, which is the virus is too smart for you, even if you're the Chinese Communist Party. And in that case, they better get their hands on as much of the Pfizer BioNTech vaccine that German Chancellor Olaf Scholz sort of offered to them a couple weeks ago when he was there. On the geopolitics side, though, in some ways this is not more interesting, but it's more interesting to me because this is the stuff I'm a nerd about. Xi Jinping and Joe Biden met in Bali earlier this week. They talked for 3 hours and they were relatively nice to each other. And based on how bad U.S.-China relations have been for the past couple of months, that was a positive. Apparently, Biden has also told Blinken, his Secretary of State, that he should go to China in January or February and follow up on the meeting. The Chinese and Japanese leaders, I believe, had a meeting just today. So China does, it's subtle, but if you look at Chinese media, even the Global Times, which is usually the sort of wolf warrior, strong rhetoric, there's a little bit of conciliatory tone. It's a subtle shift, but it's there. It doesn't outweigh all the semiconductor restrictions. It doesn't outweigh all of the Taiwan Strait crisis that we had originally. I saw that Kamala Harris is going to the Philippines soon. That will make China pissed off as well. So all the sort of underlying geopolitical things still are trending bad, but the Chinese government seems to have changed its posture a little bit. It's being a little bit more open. It wants to be a little bit more conciliatory is the wrong word. Maybe pragmatic is the right word. Like they're out there engaging on a diplomatic level, even in the, I think you saw this. I don't know if the listener saw this. Xi Jinping and Justin Trudeau, the Canadian Prime Minister, ran into each other at the sidelines of one of these meetings, and somebody got video of Xi Jinping lecturing Justin Trudeau about how it was unacceptable that he had leaked parts of their conversation to the media and things like that. And the media said, "Oh, wow, look at Xi. He's lecturing this Western leader. How bad is that?" I thought it was actually very telling that Xi Jinping was willing to be caught on camera speaking to a Canadian prime minister and saying, hey, like the basic norms of diplomacy are that when we chat behind closed doors, you don't tell anybody what's up. Like that was not sort of beyond the pale. In some ways, that was pretty engaging and pretty open of Xi Jinping to allow that to happen. I guarantee you he knew that cameras were on him when he did that. That's him wanting to be seen as if he's engaging on a diplomatic level. So China does seem to be a little more open this week than it has in months previous. And whether that's Xi feels good because of the party Congress, whether that's because the economic problems are so bad that he feels like he needs to pivot, I don't know. We could speculate all we want, but that is to me the most significant shift we've seen out of China in the recent weeks. Much more significant to me than the quote unquote reopening rumors and the bailout funds and all that other stuff.
And do you interpret that as a sign of worry or weakness on their part? Because I don't know what to make of it exactly, because again, just to reiterate, forget about everything else in the world. The most important thing is the Chinese property market. like again, it's like, you ever seen those visualizations of the universe and the true size and scale of the universe, and they show, the earth is like the size of a pin, and then it's like 3 blocks away is where the sun is, and then on the other side of town, like that sort of thing. Like, we can't conceive of things that are this big. The Chinese property market is truly this big. So don't lose sight of it. And the thing that I found striking was, people were seeming to take away bullish conclusions about this latest program that they announced, but it really is just a financing program to finish properties that are already in the pipeline. Yeah. It's a supply side program, and the problem is not the supply side. Building things is not the issue. It's not necessarily just the bottlenecks. It's the demand side and the price expectations. And the longer this goes on, I've been saying this since the summer, every week that we go and we say, hey, what's new? What are we talking about? Every week that this passes and that doesn't get better, I really just worry. Like, this is not what you would expect to see if they have the situation under control.
Well, yeah. I mean, like I said, they keep on. I think they could have the situation under control if they wanted, but they would create a bigger problem for themselves further down the treadmill. So I think they're trying to do things a little bit better this time. It's also, I'm glad you used the word supply side. Xi Jinping is definitely a Marxist. He definitely views the world from he was educated as a Marxist. He views the world as a materialist. Like, all those things are true. But when you actually look at most of the reforms that he's tried to pass since he became China's paramount leader, it's all supply side. It's more out of the playbook of a Ronald Reagan or a Margaret Thatcher than it is out of Karl Marx. I guarantee you Lenin is rolling around in his grave having his name attached to what's happening in China under the guise of communism and Marxist Leninism. That doesn't mean that it isn't there, especially the form of Chinese politics is still very Marxist and very Leninist. But when you actually sort of look underneath the hood, it's an interesting experiment China's trying to do. It wants to be more open, but it still wants control. It wants to be more capitalist without all the downside of, different frauds when they break out and what happens in markets when those things break out. So you asked me if it was indicative of Chinese weakness that it was open. Yes, to me, everything that China does right now is indicative of Chinese weakness. I don't look at China right now and see a particularly strong power. I see a power that is mostly weak, that wants to be strong in the future, but is trying to figure out, how it can get from point A to point B. And that doesn't excuse any of their behavior. When you're thinking about the Chinese sort of what Xi Jinping is doing and what the Chinese mental map of the world is, I really do think it's one of, they have a chip on their shoulder. They do feel weak. They do feel like they're not quite up for it yet. They keep on having these plans of national rejuvenation. We need to get to the next, phase of technological development. They're grasping for that next step. It's not a country that is behaving from a position of strength necessarily.
Well, they are in a wicked pickle, that's for sure. You're dependent on animal spirits among buyers of property. You're dependent on the household sector going out and getting up and going again. And yet these people are facing a COVID crisis on the one hand, and the only potential solution is a lockdown scenario where who wants to go out and buy property, when that's going on? I mean, how do you wiggle out of this? I mean, that's a very, very wicked problem they're dealing with.
Well, this actually connects to what we were talking about in the first part of the podcast, which is this is why Xi Jinping has cultivated a cult of personality around him. Like, it's much harder to do this for the Chinese Communist Party than it is to sort of say, here's the leader. He knows what's right. He's been right in the past. He has legitimacy. He cares about you. So he's the one who's been crushing corruption at every single angle. And yes, he will ask you to make sacrifices, but overall, he has the best interests of China at heart. The silver, well, I don't know if it's the silver lining. The one thing that gives me some hope with Xi Jinping is that he comes from a family, and he himself was personally affected by Mao Zedong's, I don't know what you want to call it. I mean, that dude also had a cult of personality, but was, bordering on totalitarian, loved the idea of constant revolution just to get his way, didn't care about what things actually were, just wanted the data that he thought was real. I mean, he was a real... he did a lot of things for China, but he also did a lot of bad things for China. I think of Xi as he feels like he has to go to that part of the playbook. He needs that kind of power, but I don't think he wants to do things the same way that Mao did. He doesn't want the chaos and upheaval that Mao used to keep the system in control. And that's why I say, like, China's a fascinating experiment. If they can make it through this, it's a really, really in real time, interesting way of thinking about how a country can get through one of these, can get through a crisis like this.
Well, from a market's perspective, I think what I would look for is not necessarily that, okay, so if you assume that the property treadmill is not going to get back going, and that somehow they're going to manage this, sort of a long managed decline or a faster, more violent decline that's accompanied by, some more Mao-like tendencies, even if he doesn't want to do that. I have to think that the way that's going to be reflected in market pricing, because right now, like, people are aware of it, but again, you can't visualize the size of the universe issue. It's way bigger if it happens than markets are currently pricing in. And I have to think that that expresses itself through commodity companies, through copper, through steel, through iron ore, and just the entire kind of base metals complex that's levered to China, as opposed to, oh, this is going to be some disaster necessarily for Chinese assets themselves.
This is why I said last week in the SITREP, and I can't remember if I said it last week on the podcast, this is why I was so much more interested in tax reform in China than I was in anything else that's going on. Because the answer to your question is, how do they get out of the pickle? It's very easy. Redistribution of wealth. She has to redistribute wealth from the wealthy coastal regions, from the guys who have enjoyed all of this growth, and he has to get it to the interior. And there's a version that works of that, because the interior still needs a lot of infrastructure, still needs a lot of development. There's an energy transition that needs to happen. China wants to be at the forefront of artificial intelligence and semiconductors and technology. That's even more infrastructure spending that you sort of have to do. So there are buckets of infrastructure that can lead towards jobs and higher growth and more prosperity in the rest of China, not just in the coastal regions. But to do that, like I said, you have to redistribute wealth, and whether it's taxes or whether it's, Mao's red soldiers show up and take what you've got and send it over to the interior. I mean, like, Xi Jinping is trying to find that right balance. And I think it's one of the reasons, one of the stories I saw, I can't remember if it was Bloomberg or maybe it was I can't remember, Straits Times, that very wealthy Chinese magnates, they're looking towards Singapore. The sort of wealthiest Chinese people are trying to get out because they know that their wealth is something that the Chinese government has their eyes on, because they have to redistribute it, and they have to end this inequality where the coast is one of the richest countries in the world and the interior is not. The interior has largely been left behind. Like, they're happy that they make more than $5 a day now, where they used to make more than $1.90 a day. Like that's where the rubber really meets the road for Xi.
I think the thing that makes it particularly interesting as well is we have history behind us. So Xi Jinping is, by all accounts, a very avid student of the Soviet Union and its economic decline and its ultimate dissolution. And from what I understand, he's made a big point of, writing and talking about, hey, we need to not do what they did. Yep. So you can sort of see that playbook happening where, I mean, it's funny, but the problem that China has is the same problem economically that the Soviet Union had. And if you read, like, you know, I always talk about Michael Pettis, but I think he basically gets to the problem right about what's up with China. And the biggest influence on Michael Pettis is this guy, I think, Alexander Gerschenkron, who wrote about the Soviet Union in the 1960s and basically pointed out the same thing: the declining productivity of debt, total factor productivity just going through the floor because you're just throwing more and more capital at something and the marginal returns are lower and lower and then negative and negative. And then how do you get out of that? And the Soviet Union, like, over time, tried liberalization and all the things that we know about in the 1980s, and it was a disaster. So she knows this. We know she knows this. We know that he knows he's facing the same problem. So how does he, it's like wargaming or something. How do you replay the Second World War if you know that, you're never going to get the oil in Romania if you try to do it, or you know what I mean? But
Yeah. No, I mean, yeah. Well, before we leave our listeners, let's talk a little bit about the Fed. I know you've had the Fed and the ECB kind of on your mind this week, Rob. So why don't you lead the way on that conversation?
well, this is a big conversation, so I don't know if you want to go so far down into this, but the short version of it is, last week we spoke about we were going to leave the Fed issues aside for a week because at that time it was what everyone was talking about after the lower than expected inflation print. And in many ways, the Fed has kind of done our job for us, because in the interval between then and now, the vast majority of Fed board members have come out and said, basically, hey, don't get ahead of yourselves, and walked it back, walked it back in a more hawkish direction, which is very telling. At the same time, we spoke about the ECB last week making some hawkish noises, potentially, under kind of a German influence, and wanting to keep inflation expectations under control around labor wage negotiations and that sort of thing. Well, this week, the ECB has gone in the other direction. And while the Fed has been getting hawkish, 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 the ECB members have all been coming out and saying, well, hey, let's not get too crazy on the rate hikes because we're heading into what appears to be a recession. Financial instability appears to be elevated. The ECB came out with its financial stability report this week, and my goodness, what a dovish report that was. I mean, I know these reports are designed to point out the risks that the system faces, but they were pretty clear in saying that we probably shouldn't be aggressively raising rates into the current environment. So the backdrop to this is that the euro has ripped, foreign currencies have ripped, interest rates in the US have ripped, in the wake of the inflation print. And yet you're seeing that trend of ECB dovishness, Fed hawkishness, all of these things that have been driving dollar strength and equities getting squeezed, like, reasserting itself. So I think you can probably have sort of the expectation that that trend is not going to die easily, and it's probably not done yet, um, regardless of what a lot of people are saying now.
Well, I think that puts you in the like. Have you like? Well, let me start that over. I think that puts you in the position of being a little more bullish on the dollar here in the short term, if I'm reading you right.
Yes, that's right.
How I mean, how far do you think that's going to go? Do you think that we had kind of already topped out on that, or do you think we're going to regain the previous highs? Like, how do we sort of benchmark how far we think this is going to go? Because there is this. It's sort of less interesting with the ECB, but there does seem to be this thing in the United States where every part of the market thinks the Fed is wrong and is waiting for the Fed pivot, and the Fed is just sitting there like not pivoting. And so the market gets one signal and they're like, oh, this is the thing that's going to make the Fed pivot, and the Fed's like, no, it's really not the thing, and they keep on kind of going with it. So do you think that we reached a top level before, or do you think we could surpass kind of that recent dollar strength that we saw before things turned around on the inflation print?
I think we could certainly surpass, and maybe by a long shot, where we were in September in the little mini bottom that we experienced before. And here's why. All summer, the expectation has been pivot, 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 pivot. Oh, here it is. Oh, no. Here it is. Oh, no. And I think from a market participant standpoint, that's rational because we're used to the Fed behaving in a certain way. And the ECB is a different beast, but we can talk about that separately. And I don't know if that's true. I think the shoe to drop is the recognition that that's not the playbook that the Fed is using. And I spent this week, I mentioned to you, rereading a book that I like called Who Adjusts, that was written in 1991 about the interwar period. And that is an interesting case study. And it really made me think about comparisons to today. Because then, like now, you had, again, like that chart that we've shown in the past, where interest rates are just all over the place now because the different economic zones of the world are diverging in ways they haven't. And it was very similar in the post-World War I period up until World War II, really. You had big divergences. And the gold standard was the international system of the day that would not hold. So the subject of Who Adjusts, the book, is basically, well, what caused different countries to behave in different ways with regard to monetary policy? And one of the key kind of really striking points that the book makes is, and I'm quoting from memory, but the writer in the first chapter says, it is puzzling to us how the hegemon of the world at that time, Great Britain, would persist in a policy that seemed counterintuitive to the system that it had perpetuated. So, put into today's terms, and getting back to our conversation last week, why on earth is the US behaving this way? Why on earth would the US do this? And one of the things that comes out of that study of the interwar period is just looking at who controls domestic politics within different regions and how left-wing, how populist are they, how responsive are they to the demands of ordinary people. And I think, based on really thinking about that and rereading it, that what people miss about the Fed is that they view themselves as a bulwark of the old order against all of the fiscal and political craziness going on. And I think someone like Jay Powell, who's a very specific character that I don't think many people understand, and it's worth looking into his background, which I know I sort of psychoanalyzed him on our research call, which I'll not do today. But needless to say, I've read a lot of his stuff. I think he looks at what's happening with things like the Inflation Reduction Act and the student loan cancellation and all of these sort of crowd-pleasing policies, and he sees that as disruptive and destructive to the U.S. and its position in the world. So I think people underestimate how determined the Fed is to hold the line on the craziness and take the punch bowl away. And that's something that we are wired to not understand, because for my whole career, we've never had a hard money faction in the US. We've never had a responsible interest group within the government. It's always been, hey, the Fed, QE forever, the government will spend whatever they can. This is something new. Right. And I think that they view that as their duty. And I can see the incentives that set them up to do that. So I think when you get the other shoe to drop is when you really get a weak inflation print and the Fed says no. Like when it really starts rolling over. And they know, they're not stupid. Like, people are talking about housing prices and OER and these things, how they flow through inflation. And by next year, you could have a significantly, lower inflation print than today. like low single digits, maybe, depending on what housing does.
Mm-hmm.
The Fed knows this. They're not stupid. They know how it flows through. And they're still saying, hey, we're not stopping. And you shouldn't underestimate how powerful that is.
It's an especially interesting comparison, the sort of interwar period between World War I and World War II, because I've thought a little bit about this from the perspective of the dollar and the pound as reserve currencies, and I think most people assume that the pound really lost its luster because of World War I, and after World War I, and the U.S. was this rising power. But that wasn't actually true. The United States was so weak and so internally focused after World War I that it basically, as you said, like it was the Great Gatsby, and the stock market was was basically a fraud. The U.S. wasn't really interested in being this kind of global hegemon at that point. It didn't even really have a navy yet. It was just kind of getting to the point where the Civil War was still active in most people's memories. Like, people were alive who could remember what happened in the Civil War. Their parents fought in the Civil War, had sort of relationships to it. And the pound, in part because of the gold standard that Churchill was convinced to be brought back, reassumed its position as a reserve currency. It really took World War II and the rise of the United States as the clearly not just as the clearly dominant power, but the power that wanted to exercise power, to where the dollar supplants the pound, and Britain can no longer pay its debts and can no longer support the empire around the world. It's sort of a similar thing here. It's very different dynamics, obviously, and there's a limit to what you can do with historical analogies. But to your point, the U.S. has these competing factions, and some think you have to keep the sacredness of the dollar and of the U.S. balance sheet pure so that we can continue to lead in the future, versus the U.S. politicians at home who are trying to figure out how to stay in power. And then the other powers they're up and coming. Well, some of them are up and coming. Some of them, like Russia, are on the way out. But again, this goes back to the conversation about China. China's weak. China's not interested right now in having the yuan be the global reserve currency. That wouldn't necessarily be good for them or for the things that they're trying to accomplish in their economy right now. So you have the U.S. sort of holding on to its position and has all these, I don't know, reflexive, instinctual, I don't know what the right word is there, things that the United States is doing. And that can probably last for a while. But to your point, like at some point, it probably has to give. It'll be interesting to see what happens when the data rolls, if you're right, and the Fed does kind of hold the line, and what kind of political pressure they come under, and whether the Fed is up to standing up to the political pressure, or whether they will eventually bend. I mean, they also, the other part I think that people have trouble with understanding this Fed is that they stuck to the transitory narrative for so long. So it seemed like they were really stuck in the mud about one thing, and that, in retrospect, people view as a mistake. So are they going to learn from sticking to their guns for too long and actually pivot when the data tells them not to? It sounds to me like you're saying, no, don't expect to teach an old dog new tricks. They stuck to that narrative because they thought it was what was best, and they will stick to this narrative as long as they think that it's what's best, and they will think that longer than the rest of the market will.
Well, the British mental model is the one that I'm working with right now, for sure. And I think that's a good point that you bring that up. And even the comparison between China and the US, which is not nearly as far-fetched as some listeners may think, because just like China was in the mid-2000s, with its enormous current account surplus, its exports leveraged to the whole world, its capital exports, getting plowed into US Treasury bonds, as we all know, the US played the exact same role in the 1920s. It was the rising export power. It had capital surpluses just gushing out the seams that it was investing into German bonds and English bonds. And England was playing the role of the US today, which is the uncertain hegemon, and internal factions determined to sort of hold the line against things that are going wrong. And it didn't go well for England. And I mentioned this sort of jokingly a few conversations ago, but like I view France as in the 1920s as sort of like the EU today, which is, what do we associate with France in the 1920s? It's Hemingway and Scott Fitzgerald and all of these figures and parties and, the go-go years, and the French economy was booming and the currency was tanking, right? how much do you remember about England in the 1920s? Like, can you name one really famous thing or figure in England in the 1920s?
Well, I mean, I can because John Maynard Keynes was sitting there screaming bloody murder the whole time, but nobody was listening to him.
Well, yeah, you can because you're a nerd.
Yeah.
But in the popular culture, like England is a blank because no one went there because the currency was way too strong because the economy was in constant deflation and slow growth because they were clamping on the brakes from a monetary perspective because they were trying to defend that old order. And it didn't end well for them. And up until 1939, France ended up doing much, much better with sort of the approach that they took. So I think if you look at what the ECB is saying this week, not to get too highfalutin and put it in the practicalities of managing money today, look at what the ECB is saying about being responsive to economic growth and inflation, and unemployment rates, and not tipping into a deep recession and being, aware of the risks versus what the Fed is saying. And I think you see a lot of echoes there. So,
well, and the only reason things went well at all for the United Kingdom in the end was because, and Churchill was on this early, I mean, the new world came to the rescue of the old, to paraphrase what Churchill said in the context of World War II. And I think the big difference, there are a lot of differences, again, like there are limits to historical analogies, but the big difference here is that the new world coming to the rescue of the old was the English-speaking United States coming to the rescue of the English-speaking United Kingdom and the system that they had been a part of. And even though there were periods of strife between them, they were ultimately, sort of in the same family. I don't think the East is rushing to come to the rescue of the West. I mean, that's a very, very different barrier and a very, very different set of constraints and relationships and incentives kind of for both sides. And that's in some ways where the metaphor breaks down.
In a darker direction, unfortunately.
Well, I'm just a beacon of light and positivity over here. I actually am. Most listeners probably think I'm terribly cynical. I'm actually extremely optimistic. I think it's the only way that you can actually deal with all the craziness out in the world is to be optimistic. Because it doesn't affect me. I go back to, I come back next week and I'm like, no, I can see the silver lining. I can find it. Anyway. I think we'll leave it there, Rob. I think we covered plenty. So, yeah, that's it. Anything else for the listeners, or shall we say goodbye?
I think for this week, we're good to go.
Okay. Cheers. Thank you so much for listening to the Cognitive Dissidents podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.